trading. Just going to run through a bit of Bitcoin analysis. We're going to look at where we've been over the past month, what happened with the economic data release on Wednesday, and where we're going perhaps over the next 30 days. So we just start here. We're looking at the one-day chart. Now, going into Wednesday's CPI, PPI, and jobless claims reports, we had this kind of symmetrical triangle formation. What that was showing was that after the kind of large breakout and run-up that we'd had so far in 2023, we were basically consolidating, and we had been in that formation since the end of March. So with the consolidation, what we're effectively doing is we're exhausting buys and sells within a certain range. And what that means is at some point you're going to get a dramatic breakout. And that breakout is going to be instigated by a spark. So whether that's a piece of news or a world event, something will trigger that, push the market solidly in one direction, and because we've exhausted through the period of time that we've been in the consolidated range, the buys or opposing sells, then that directional shift will have weight and give us a large breakout. What we found here was that the instigating factor, or the trigger that was going to take us out of our range, was the inflation data that came out on Wednesday. And what was strange was that although the inflation data was good, in that it showed that inflation was coming down and really kind of confirmed to us that we were going to get a pause in interest rates at the next Fed meeting in mid-June. What happened instead was that we broke down. And so if we have a look at the formation, what we can see is this is the candle where we had the news release, and we can see that there's a huge swing here, so huge volatility. We broke up initially following what we assumed was the correct directional basis. Interest rates are going to come down. That means that money's going to move out of the dollar and move into risk assets like Bitcoin. Therefore, great, we're going to break up. That very quickly shifted, and we started to break down, moved back up, and then broke down definitively. And we're now down to 26,300, well outside of the range. So why did this happen? Well, one, we kind of probably had our technicals slightly incorrect. So if we pull this formation out, we can see that we actually had a bearish head and shoulders forming here that we'd overlooked. And that breakdown then almost technically became inevitable. Now, it is still unusual because technicals will generally be overpushed or overpowered by fundamentals and macroeconomics. So it is still strange. We have also got one other news story that I don't think is getting a lot of play, but that might have some kind of impact. So also on Wednesday, as the economic data was being released, we also found out that Jane Street and Jump Crypto, two very large market makers, were leaving the American market due to the US regulatory problems. Now, they're not leaving crypto altogether, they're leaving the US. So maybe that's why we're not seeing this given a lot of press, or it's not being referenced a lot in terms of the analysis that's out there. But I think that this would dramatically affect the ability to make over-the-counter purchases, which is how large buys and sells are going to be made. So perhaps losing the ability to make those large buys and sells by these market makers is why we didn't have the support or the buying pressure that we anticipated when the inflation data was released. So what I'm going to do now is just stick on the Bitcoin indicator and just have a look at where that kind of leaves us. So we can see that the indicator, this bear icon here, shows that it gave us a bearish signal. It told us to go short actually prior to the release of the inflation data back on Tuesday. Interestingly, the take profit that it's given us as well aligns exactly with this support level of 25,254. Now that's significant because chances are, if we are going to continue this bearish downtrend, we can see that there is selling momentum there. We're probably seeing some cascading liquidations as people's long positions get eaten up. So that looks to me like a very solid target. It also ties in almost too perfectly with our weekly pivot. So this unfilled weekly pivot from back at the end of March is being filled as we speak. The very bottom of that range is, almost exactly aligned with the take profit and the support range. So there is a very high probability that we're going to break all the way down, fill this pivot, and hopefully bounce from this support at 25,000. So if we zoom right out and take a much kind of longer term look at where we are and perhaps where we're going to go over the next month, so we can see this is the logarithmic growth curve for Bitcoin. This is the Block Party Labs version, so proprietary version that we make ourselves. What we can see, so we have this is basically our last cycle. So we're going all the way back to the third halving here. And we see this, we were in this huge falling wedge formation, very bullish, but obviously very painful to build up to the point that you break out. But we have broken out conclusively around the break of the year, and we're now in this kind of solid uptrend. So we can see that from the point that we broke out, we have a trend line coming in there. And if we were to take a look at the highs, the trend line's giving us a broadening wedge formation. So this is a continuation pattern. So when we're in this breakup, this is very bullish. What we can also see, I've drawn on here, is the support level from our 6-hour chart that we were looking at previously, which is the 25,200. That aligns almost perfectly with where we would expect in this broadening wedge formation to test that lower trend line. So it looks like we're en route to doing that here, and we'd expect to bounce from there and come all the way up and test the upper trend line. Interestingly enough, if we go back to our 6-hour chart, and we're going to clip on here and show the CME gap finder. So if we zoom out on this chart, we can see that we have an unfilled CME gap just here. So in the range 34,000 to 36,000. That lines up with where we would anticipate hitting the top of the trend line on this broadening wedge formation. So for the next 30 days, our anticipation would be that the 25,000 support holds, and that our upper range, if we were to continue this broadening wedge formation, which it looks like we're in, then we're going to test around the 35,000 mark. One last thing while we're on the logarithmic growth curve is just to say that what we've got here is the pi cycle reversal indication. If we zoom right out and have a look at some times that historically is triggered and where that took price, it's actually incredibly bullish. So the pi cycle reversal from the second halving cycle took price about 190%, and from the first halving cycle it triggered about here and took price about 120%. So within our current range we would anticipate tracking up. Obviously when you zoomed out like this, you know, that there will be corrections within that, but we'd anticipate again seeing a 100% gains from that pi cycle reversal, which is going to take us probably up to around 40,000, which I think is a very common analysis target for the top in this cycle. Thank you very much. If you've got any questions, feel free to comment down below. If you want us to look at any other altcoins, do some analysis on those for you, we're also happy to do that. So feel free to comment. We also do a 7-day trial for our premium subscription package, which is available through our website. That's blockpartytrading.com. Thank you very much.